I'm ICIS Chemical Business Deputy Editor Will Beecham, and I'm here with International Echem Chairman Paul Hodges. Hello, Paul.
Hello, Will.
Paul, you've just written an article for the magazine about the oil price, and you are the one who predicted the oil price crash way back, and you've got a long-term prediction now that the price is going to stabilise at sort of $30 to $50 per barrel. Why do you think that is? What are the key reasons?
I think, Will, very simple, that we're going to go back to the world that we had before the central bank started interfering in financial markets with their efforts to try and create wealth effects and artificial demand. And if you look back through history, you go back 150 years, price of oil has always been around those kind of levels, maybe even a bit lower. I think in the very short term, we could well see much lower prices, of $20 to $30, because there is such a vast surplus. If you look at the States today, we're talking about inventory surpluses or inventory stocks, which are at 80-year highs, the highest they've ever been known. Yes, I think we will go back to values related to energy values, but I think we've got quite a bumpy ride ahead.
And just looking at the way the oil price was inflated so much, was that to do with a lot of financial speculation going on, do you think?
Absolutely, Will. What you had was two sets of speculation. One was around subprime in the 2004-2007 period, where obviously central banks were inflating housing prices as fast as they could, generating demand that couldn't be paid for in the end. Of course, we had the subprime crash, 2008, what a disaster that was. And then they tried the same game again, but this time with stock markets. And unfortunately, what happened, an unintended effect of this, I think, really, was that pension funds became very worried about the value of the dollar. They knew that the Federal Reserve was trying to boost the economy and boost exports by devaluing the dollar. So they went into oil as a way of getting a store of value. And so you have about 85 or 90 million barrels a day of oil being produced by physically, if you like, in the markets. And the financial players doubled that and trebled it. And actually, at the end, it was 7 times that volume. 616 million barrels a day were traded every day of 2011, compared to around 85, 90 million of physical. So, of course, buy and hold, investors as they were, buying for 3 or 5 years out as a store of value, it took the prices to $100. But there was absolutely no physical reason for it. And now we're paying the price.
We talk about paying the price. You write a lot about the inventory effect. A lot of chemical companies are going to be caught with a lot of expensive inventory, I guess. What impact could that have?
I'm seriously worried about this. We've seen some of this already in the fourth quarter with people taking fairly large write-downs. But we've still got further write-downs to come. And this is unfortunately inevitable, because companies buy naphtha and feedstocks at the prevailing price, and then they have to process it, and then they have to store it, and then they have to deliver it, and so on. And it takes 30 to 40 days usually to get that through. So inevitably, you're buying at one price, and then you're selling in the market at a lower price, which may be half that. And the whole system is completely upside down, and it will take a very long time for this to sort out, I think.
Could it lead to financial difficulties, bankruptcies and things like that for chemical companies, do you think?
Well, we saw that, unfortunately, didn't we, in 2008 and 2009. I think unless people are really very careful, because it's not only that you've done a credit check on your customer and you say, look, they're a very sound customer and so on, but what about their customers? And, of course, the other side of this coin is, why is this great unwinding of policymaker stimulus coming along? It's not happening in a vacuum. It's happening because China is moving into its new normal policies, which means it's not anymore doing stimulus. It did the most stimulus of anyone between 2009 and 2014. So it quadrupled its debt, $28 trillion of debt. And now it has to stop. It has to stop, it has to go into the new normal, and it has to try and pay some of that debt down. So the headwind of that. So demand is going to disappoint very dramatically in China, and yet we still have companies gearing up with increased capacity to supply what they thought was going to be increased demand. So there's a double order here. One effect is that companies have been sold a pup, if you like, and blindsided by the Federal Reserve and the central banks on the level of prices. Secondly, they've been blindsided on the level of actual demand. Both. are going to cause tremendous chaos.
I was just going to ask you about any other impacts on the chemical sector, which you've alluded to. What about the US? You know, they're investing in all this expansion of capacity there, but they're losing their ethane cost advantage, aren't they?
Well, exactly. I mean, I think that I'm very sad for the States because they've been right in the crosshairs for this. They've been completely fooled by the central banks, and it's understandable that has happened. They're planning to invest this vast amount of money, but where? You and I have talked about this in the past, of course, several times. You know, where is it all going to be sold? We've got 2014 data for ethylene production now in the States, and it was lower yet again than it was in 2000. The peak of ethylene capacity was 2005, 2004 for all the major derivatives, 2007 for one or two. So we've gone nearly 10 years from a peak. And if it's all going to be sold overseas in exports, well, where? Because the Middle East is expanding, China is expanding, and the States is expanding. But there's only one market which might show any growth at all, and that's China. And that's going to be taken first of all by China's own expansion, and then secondly by the Middle East. If you look at US exports in the past 4 or 5 years of polyethylene and other things, they have been declining. So that these projects have to be cancelled. They really have to be cancelled. Otherwise, it is going to be a terrible disaster, and there will be massive bankruptcies if people do go ahead and don't. You know, it's always very uncomfortable admitting that you made a mistake, even though you were fooled by some very difficult circumstances. But it's not half as difficult as if you carry on and pretend the mistake hasn't been made and commit to the capacity that nobody can possibly sell.
Thanks very much, Paul.
Thank you, Will.